So I shared earlier that you guys have made $50 billion of investments so far year to date, which is incredible just given the dearth of activity, or I wouldn't say dearth of activity, but M&A deal making has been down significantly. And you can attribute that to a whole host of factors, whether it be the higher cost of funding, regulatory backdrop, et cetera. Maybe talk a little bit about what is your outlook for M&A activity, and perhaps kind of share what do you think would be the drivers or maybe inhibitors of M&A going forward.
Well, I think if you look at what we did mostly, it's been largely infrastructure and renewable power and transition deals we've done, where that asset class has continued to just be so incredibly stable. The infrastructure assets, regulated contract, inflation protected, rates are high, but inflation's high. So those assets are valued well. But for us, the real thing that's come about is there's companies that needed capital. And for 15 years, we've just been building relationships. And we're viewed more as an owner-operator than as a true sponsor. And so we did the Deutsche Telekom tower deal. They called us. We did Intel. We're helping them build the fab plant. I think it was $14 billion. We raised $12 billion of debt in last summer when no one could raise any capital. We raised $12 billion of bank debt for one deal. And that's relationships and partnerships. So I think we've been continuing to invest. What we haven't done a lot of in the last 6 months has been private equity and real estate. And that's not because we have capital, we're ready to invest. We're just kind of waiting to find the opportunities, and we're starting to see it happen. And what's been the inhibitor is availability of capital. You're obviously in that period as well where the sellers are still holding on to the old price, the buyers want the new price. Everybody has this view, but I think as we move forward and people forget 2020 and 21, which really was an anomaly, and you start to get that coming together, then I think you'll start to see transaction activity pick up. It feels like the lending market is more open than it's been. More people are willing to back acquisitions. Sellers kind of need to recycle capital. If you're a private equity fund and you want to raise your next fund, you've got to think about returning capital from the older vintages. So I think the whole thing has kind of been locked up for 18 months, and at some point it's got to just unleash.